Hi everybody, Alex Deploy here from Expert Forex, and in today's video I want to do an overview of the double in a day trading strategy. Now I'll explain the double in a day strategy using this diagram on your screen. Firstly, one would enter at a certain price level and hoping that the price would go all the way to your intended target. On its way to the target there will be top-ups. There will be one top-up, two top-ups, three top-ups, and by the time it reaches your target, the intention is that you will make 100% gain on your account balance, risking between 5 and 2% of your account. Should your transaction not be successful, it will go back and hit your stop at a predetermined price level. Now the other advantage of using the double in a day strategy is that a large degree of the trading is risk-free. So in other words, if you look at this table here, that little section there is the section where you will make a loss, where the price comes back and hit your stop. Once it has reached a certain level, a break-even stop kicks in, and after that happens, the worst outcome you can have is a break-even outcome, because if it stops up at a particular level, the break-even stop is moved to a point where if the price comes back, you will be stopped out at break-even. When I use this term break-even, in fact, in reality, you make a very tiny profit on your break-even stops. So at any point, as your top-ups accumulate, there will be a break-even stop that allows you to get out of the deal at a break-even level. So it becomes risk-free after a particular level, and that is one of the prime benefits of using the double in a day strategy. So let's look at some of the risk strategies that you can use to trade the double in a day strategy. Firstly, you can risk 5% to make your 100% gain. Now what that basically means is that you have a 20-to-1 risk return ratios. You can have 20 losses and 1 gain and you will break even. This strategy allows you to have 20 losses, and then we have an area where there are break evens. Now in a typical strategy like this, you would have 8 transactions that break even, and let's say you do have 1 out of the 29 transactions that you do that hit the profit. So your odds in gambling terms are you only have to get 1 transaction right out of 29 transactions. Now it gets better if you use a 4% risk. 4% risk means that you can get 25 deals wrong and 1 right and still break even. So let's have a look at this situation. You have 25 losses, you have 10 break-even deals, a little bit more than the previous one because your stops are slightly smaller, and you have 1 profit. So in this, using this strategy, you only need to get 1 out of 36 deals correct to break even. Not that breaking even is the objective of the exercise, but I'm showing you the risk management aspect of trading the double in a day trading system. And it improves even more when you use a 3% risk. You only need to get 1 deal correct out of 46 to break even. At 2%, your risk return ratio is 50-to-1, but you only need to get 1 deal out of 66 deals successful to break even. So these are, from a gambling point of view, fantastic odds. From a trading point of view, they are even better odds. Right, so let's have a look at trading options when trading the double in a day technique. The double in a day technique was essentially developed for highly skilled traders who could spot a high probability trade and then implement the EA for that particular trade. So they would use either a time of day basis of entering the trade, and that could be, depending on the broker that they're using, announcements. It could be the open of major markets and the close of major markets. They would also use support and resistance to determine breakout and bounce levels. And they would use consolidations to find breakout potential situations, and they would merely straddle those using the double in a day technique. In the double in a day EA itself, we do have time of day options where the double in a day would only activate at a certain time of day. We do have a straddle facility where the market can be straddled on an automated basis. Then the other option of trading the double in a day technique is the continuous trading option. Now that means running the EA on a continuous basis. Now when you're doing that, you're using statistical trading, information from historical trading in the past to determine what the odds are when using a particular entry technique and a particular double in a day strategy to have a successful outcome over a long period of trading, let's say for a year. The Happy EA automates a number of high probability entry techniques, and we'll be adding the magic moving average to that, so there'll be in the region of 4 entry techniques. When continuously trading, you'd also use trading filters. Now, I've already mentioned one of the filters, which is the time of day filter. Now, if you only enter trades at a particular time of day, which is more volatile than other times, that will increase your possibility or probability of success considerably. So continuous trading relies more on statistical and historical performance of risk techniques and entry techniques, whereas the highly skilled entries depend on the trader to find those entries. The advantage of the highly skilled, though, is that you are more targeted and you are stacking the odds a lot more in your favor than the continuous trading. The Happy EA is currently using the 5% risk strategy, which means that you need to have one successful deal in 29 to be successful. We have recently done, with the help of some double in a day owners, we have done some research, and it looks like we can introduce a 2 or 3% risk profile, which will increase your ability to withstand losses by increasing the odds from 1 gain out of 66 to create a break-even situation. But as I said, hopefully you can get 1 gain out of a lot less and be highly profitable. So that's one good change that we're making to the Happy EA. Also, from a trading psychology point of view, you need to get used to making losses if you're trading on a continuous basis. As you can see, the losses are a lot higher and the break-even trades are a lot higher than the actual winners, considerably. Now in the next video, I'll talk a little bit more about another change that we are making to the Happy EA, which is the introduction of a time of day option. So for me, Alex Deploy, thank you for watching this video, and cheerio.